Edition of the NBC Markets Morning Call, 9th of October 2025. Tech just did it again, melted up. Jensen from NVIDIA really talked up AI last night. And, the guy's a genius, but he's also a genius salesman. There was a few comments out of last night as he's investing in XAI, which, there's potentially a blossoming bromance between him and Elon Musk. And the Fed minutes basically flagged further rate cuts. So that doesn't surprise me in the slightest. There's no other economic data coming out at the moment because we've got because the government shut down. So essentially, everyone's clawing through the scraps for any sort of lead. But those minutes would be, they're on the record. So basically, anyone who didn't want to paint a target on their back with Trump would have been dovish, and surprise, surprise, we got a super dovish FOMC minutes. So most policymakers revealed support for further interest rate cuts amid a softening labour market. They didn't talk too much about inflation risks, and there was uncertainty about over the neutral rate. What the neutral rate is, and there was some sticking points. There were some ultra dovish members push for steeper cuts, and without even having to dig into that, I would imagine that would be the guy that Trump installed onto the Fed after he fired Lisa Cook. It's agree with it or not, Trump, if anything, is extraordinarily predictable. So obviously, and the way that the market is at the moment, which is, I would say, I started on the trading floor in 1996. First year was Asian currency crisis. I've been through, the 01 tech bubble, been through the GFC. I was credit spreads trader, leading into the GFC and everything. I have not seen a market this bullish in nearly 30 years. So, and look, you can scream all you want about valuations, etc., but there are periods in the market where the market just disconnects from from reality, and it can run for long periods of time. So, whilst I've raised in the past, key indicators like the Shiller PE ratio or the CAPE ratio, which is like the long-term average forward PE or PE. It's one of the ones that Buffett takes into account, and this market cap to GDP. Look, those alarm bells might look like, ringing endorsements of this market needing to be sold off. But what you've also got to take into account is industrial revolution style change in form of AI, which I believe is bigger than even the internet. It's an enabler of the internet, and also the concentration of these top 10 companies in the world being largely about 20% of the total, 15 to 20% of the total money supply. So, bit of a history lesson for you. NVIDIA is about halfway there to being relatively the largest company in the history of records in terms of global GDP to market cap. Dutch East India Company was the one, would have been around about 9 maybe trillion back in the day. But we're talking, they were almost a country within themselves, and in a largely lawless state in the 1700s. Or global, with the likes of regulations around anti-competitive behavior and things. It's a miracle that NVIDIA has gotten even to this point. Doesn't mean it's not going to keep going up though. One of the really key things that I've noticed, and there was a great talk, if you can find it on Twitter or socials, go and find yourself the interview with Ken Griffin, the CEO of the world's biggest hedge fund, Citadel. Probably the smartest traders in the world, there or thereabouts. For such an enormous size fund. If you're a fan of Ray Dalio, I would highly recommend. Ray's kind of losing, in my opinion. It's just, just a perma bear. You need to switch him off and maybe go and look at someone who's a bit more reasonable. But a lot of the sovereign wealth funds, like Singapore, the Scandinavians, Canadians, etc., which have massive government and sovereign wealth funds, they're still buying US companies because they love US companies. They're just not buying them in US dollars. So that's where you're seeing gold rise. Basically anything except US. So, and that makes a hell of a lot of sense. Basically, that de-dollarization continues, which is going to be good for the likes of Bitcoin, gold, silver, platinum, you name it. But it doesn't mean these companies do 50% plus of their revenues overseas. So they're not really US companies anymore. They're world companies. So, it's so there's a lot of flaws in the arguments for overvaluation, just in terms of, if you bring up historical arguments pre the internet, they're largely kind of moot. And you're talking about, I'm normally someone who flags the risks and is very, very cautious because, our clients here at MPC want to protect their capital. Because they generally, the demographic is that they're retired, and that is the priority. But the I can see arguments for why this is continuing, and that Shiller, that CAPE ratio in the 01 bubble went for 18 months at above 40. I think we're like 10 to 12 months through, so maybe 10 to 12 months through. So who knows? This could go for 6 more months. It didn't, and the risk is when you're bearish too early is, you might miss the next 20%, and then by the time it drops 30, you're back to where you were. So recommendation generally is stick in the stuff that has got a great thematic, solid balance sheets, your really high conviction stuff, and go hard at those. Because at the end of the day, even if the market pulls back, you're happy to have them in the long term. But if you've got stocks that aren't rallying and this thing's going nuts, I mean, when that's the stuff you should be getting out of, because if it ain't rallying now, God knows. I mean, what does it need? And that probably excludes some of the mining stocks and things like that. But if you're talking businesses that are not commodity based, if they're not doing well at the moment, it's going to be a while until they improve. So as you can see, super green in that tech region. Micron, which we got out of here at MPC, I don't know, pre-earnings for 35-40% gain. It's probably up another 10%. AMD another 11%. That's one of our current global alpha holdings as well. I think we're up 50% on that. Palo Alto up 3%. It's another one. So if you're in the right areas, the bullishness is still there. So banks coming off a little bit. Not really sure. I guess uncertainty doesn't really help them overall. Tesla bounced a little bit after last night's disappointing move, and the new low-cost cars, which are still 10 grand more than the Chinese cars. Everyone's essentially waiting for the Cyber Taxi and the Optimus launches, and maybe and the integration of XAI and Grok across all these platforms, etc. Elon's so far ahead of the game. It's hard to not think that he's traveled back in time from the future, because he just seems to, even that the X investment, which was 44 billion, which was, he bought out of pride more than anything else, I think. I mean, they valued XAI at 200 billion the other day with a cap raise. So Jensen and Elon getting into bed together at the moment, not literally, of course, although God knows. But those two are having a bit of a bromance at the moment. And Jensen basically said, I want to be involved in anything Elon's involved in. And these two guys are two of the smartest people in the world. So be frightening what they could potentially do. Tesla's even got its own branded NVIDIA GPUs happening now to their own tech specs. So look, I think NVIDIA at $4.5 trillion market cap it'll struggle to double. I think your growth's in these guys in Tesla, because they're essentially like they did with electric vehicles. They're creating a market to tap, which is going to be huge, and compounded annualized returns on markets that don't really exist or are very tiny are generally enormous. So yeah, I think Tesla's passenger vehicle to consumers will be it'll be like BHP reporting their their silver or uranium. It'll just be a byline as a byproduct at the bottom of the thingo soon. So this was a really good. I mean, this is where people's concerns are. This is kind of the cycle of all this money. So there's been a very popular meme that they're all investing in each other, and realistically, it's a power board plugged into itself, right? So, and look, this is the proper version of this, and there is a lot of money flowing back and forth to each other. Which is fine. The only thing wrong with it is if investors are applying multipliers to the valuations based on, if 100 billion cycles between two companies, they can't both get the uplift. Well, I mean, at the moment they can, but you can only count. It's a general account. You only count the money once. And I think what the market's doing at the moment is counting it like 5 times. So, and essentially everyone's doing deals with OpenAI, and look, and Nvidia particularly, and obviously Microsoft's kind of been pushed out of the center a little bit, and then AMD, and then the government's coming in and backing them up. In the end, this is, I think nearly all of these stocks are benefiting from more bullishness of this money flow than what should be counted. But like I said, I sort of think that, man, all of these guys make their chips through TSM, Taiwan Semiconductors, and no one really has a new product and covers all bases except Elon. So that's sort of where we're looking at the moment, because I think a lot of the upside is very baked into a lot of these things overall, and I think you'll start to see that shift to that productivity. People they're not monetizing revenue to the consumer at the moment, which was what happened in 2001. The likes of Google and Facebook and stuff didn't even exist until 3 years after the tech bubble burst. So, like, the companies that are going to be the next Google and the next Meta, they're probably in a garage or not even started yet. So, but this infrastructure build out is necessary. That's going to happen. Data centers, rapid expansion, power, and all that sort of thing. Chips and foundry chips, etc. So, and then they'll be the solid themes, and and you won't really look to but everyone's going to look for productivity gains, because they've all gone and spent a lot of money on this now. So they're going to have to do cost savings if they're not getting revenue out of it. So just BlackRock to come up this week, really. No figures. I think Powell even pre-recorded his interview. There's no figures. China extended its gold buying streak for 11th month straight. Gold, just like the US tech sector, is just unstoppable. Silver had like a 1-day breather, but gold, I believe, is it's almost at 4,100. It's pretty out of control. I clearly remember when Jonathan Takadena called gold to 2,700 like 18 months ago, and everyone was like, "Wow, that's a big call." We're like, we're so close to nearly being double all the way through that. So it's and realistically, if you include money supply, or you index gold to inflation, I mean, yes, it's a headline record high, but it's only halfway if you include how much money's been printed. So you know, I think probably is going to cool down. They're going to get get it together in Congress, albeit everything I've watched this morning on Bloomberg suggests that this shutdown could be very long. Like congressmen ambushing other congressmen and attacking them with media, with news reporters behind them, and all this. Like it's just, you know, seen more maturity in a primary school yard. But you know, but I think it'll probably have a breather once they sort out this shutdown. But I don't. It'll be just a breather. And I, you know, silver got through $49 last night. I believe $49.95 for the spot price is the all-time high. So yeah, basically, I think we hit 1980 and 2011 was basically the high. I think 2011 high was $49.50 spot, and then $49.95 back in 1980. Once we get through $50, that's just huge. So God knows, it could do it tonight. Who knows? So yeah, we're so we've got the webinar coming up in about just under a month's time. But at NPC at the moment, we've got an enhanced growth strategy around AI automation and AI robotics future. So yeah, if you would like to know any information, just email me, mark.gardner@npcmarkets.com.au, and I can send the investment documents, but for wholesale investors only. And we've also got a fixed coupon note, which is similar to sort of a hybrid, except just done a different way. It's backed by US stocks, and it's got we've got Nvidia, AMD, and Google as the reference assets in the basket, and it yields 13.7% for the next 2 to 3 years. So, and that's paid cash quarterly into your account. It's a very, very good way to get some extra income. And if you've got hybrids, easy switch, safer, basically the same thing, just done a different way. So for those of you who've got big hybrid portfolios, yeah, definitely inquire about those because they're, you know, they are actually genuinely safer with very much the same characteristics. So, but yeah, guys, thanks for, sorry to give you the sales pitch. Thanks for listening this morning.